Hi everyone, Michel here with a market update, this time for the third quarter of 2024. Now I know that the data is only trickling in very slowly, but there's a clear pattern emerging right now. Is the market moving? To keep it short, yes it is. Good direction, bad direction? Depends on what side you're on. Of course we have seen some changes in the rental market as well. There's a new rental law. So what does that mean for you as an investor or renter? But first of all, let's get into those numbers and see what's actually happening on the seller and buyer side here in Luxembourg. Without further ado, let's get right into it. Now the data is only trickling very slowly, so we can only rely on numbers that happened 2 or 3 quarters ago. Unfortunately, we only have the quarterly numbers of the first one of 2024. Q2 and Q3 we'll have to wait for. Probably they will only drop at the end of this year or perhaps in 2025. But we do have some numbers from last year and they're quite exciting to be looking at. Now, let me get into it. We will compare most of all apartments, existing and newly built. So, the average price per square meter for existing apartments in 2023 dropped from 8,394 in Q1 to 7,542 by the end of the year. Now this represents a clear decline in price. Nothing new here. We already knew that prices were dropping on existing properties. However, newly built units, right? So developers, they have actually risen in price. So the average price has risen to 10,119 per square meter. That is an up from the 9,347 per square meter in 2022. So this indicates that basically these developers are still pushing prices upwards despite markets spiraling down. In other words, everyone that is in the existing market, so everyone that is doing resale, you're not a developer, that's what I'm guessing. You are basically lowering price, which is good. But at the same time, the developers is cutting into their fingers by raising the price in 2023. Not that smart, developers, come on. Prices are going down, you should drop prices as well. I was hoping that developers would see this, but they aren't. I thought that you could actually start negotiating on price with a developer, but it appears to be more important to either not sell and go bankrupt than it actually is to sell the existing unit you have on the market. A little piece of information is uncertain here though. Are the units that developers sold to the government included in this price? If they are, that means that the government overpaid with tax money, not cool, or it means that these numbers are actually not included at all. Uncertainties, not sure about that. But let's get to the market reactions and especially buyer behavior. So buyers are basically avoiding new developments, primarily due to the high prices, obviously. And there's concerns over developer bankruptcies. We have Senaro, which went bankrupt. Maison Lux has closed its door or sold. Not quite certain about that one, but I think I know what happened. So there's uncertainties for you as buyers to actually purchase from a developer because you are not sure whether or not they will finish the project. Understandably so, you buyers are trying to avoid them. And we can see this in the numbers. So developers have sold only 410 units in 2023. Well, there's 2,681 existing units that were sold in that same period. Most striking is the Q1 of 2023, where just 92 units were sold, marking an all-time low ever recorded on the Luxembourgish real estate market. Developers have never sold anything close to that number. It has always been way above. So buyers are clearly more confident in purchasing existing units or houses rather than apartments. Let's shift to buyer-seller dynamics for existing units, right? So prices for existing units are steadily declining, clearly. So private owners seem to have adjusted and respond to the market. They want to sell, they have to sell, they want to move from an apartment into a house, and so they're lowering prices. It seems to me that you sellers out there of existing units are much smarter than developers, perhaps also a lot less greedy. You are willing to move on and take a lower payday than a developer does. A developer seems to just want to go bankrupt and see what happens next. Not much actually. So the market is approaching a stalemate right now between buyers and sellers. That's what we have noticed now. We have noticed that although sellers are smart and they want to lower price to adjust to market demand, they are no longer willing to go any lower than that they have in the last 2 years. So those units that have been on the market for quite a long time, there's no more negotiation there. There's nothing happening. You cannot negotiate another 100K off a price that has come down already to 100K. So you buyers really need to make your moves now, because something will happen, right? We have seen right now that there's a spike in showings. So anything that happened from August to September, there's been a lot of movement, right? We're not in gear 4 or 5, but we're definitely in second gear, trying to get into the third gear. So as the interest rates are coming down, that means that the budgets of buyers are going up, and in turn, this means that more deals will get signed. Quite simple. So if you're a buyer out there and you want to get a deal, this is the moment to do it, because at some point those sellers will realize, hold on, there's a lot of movement on the market. Perhaps it's time to raise prices slightly again. And we get the ball rolling again in a different direction, which is not something that I hope will happen all too fast, but there's clearly movement in the market. Make your move if you're a buyer. Now let's get to the rental law. We have seen that the rental law that just came out into effect on the real estate market has had some repercussions, but we're not quite certain in which direction it will go. For now, people are still a bit apprehensive whether or not this will basically hinder the market or streamline it in a good and orderly fashion. In that sense, we have seen that now the commission is split. So the agency will be paid by both the renter and of course the investor, the owner of the unit. Now that's a good thing, because it was quite a high cost for the renter to both pay, well, agency fees, 2 months deposit, maybe even 3. By the way, the new law stipulates that now it's only 2 months. So if you have any kind of investor or landlord out there that wants to ask 2, 3, 4, 5 months, it's not legal. 2 is the legal limit anyone can ask. Not only that, you also have to return the deposit in an orderly fashion. You can't keep it for a long extended period of time. As a landlord, you have to give it back if inventory checks out. So what we are probably going to see here is that there's going to be a less involvement of professionals, so real estate agencies that will do the transactions. It will be more on the private market. In other words, there will be some mistakes. Those mistakes usually have to get cleaned up by lawyers in front of the court. So we are not quite sure where this rental law will lead us, but in any case, I think it's a good thing for the market to streamline it. It might go wrong, it might go well. We will still have to wait out what the repercussions will be. So this is the real estate market update for the third quarter of 2024. I really hope you enjoyed it. If you did, don't forget to subscribe and like and give a little thumbs up to this video. Hopefully, I'll see you in the next video. Until then, my name is Michel with Michel Real Estate.